Hello everybody, welcome into the NinjaTrader ecosystem webinar room. Before we get started with today's event, I would like to take a moment to test for picture and sound. So if you can see the slideshow showing Fibonacci Trading Institute information, and if you can hear my voice, please enter a Y into the room, and that'll confirm that we have audio and video. Alright, I'm getting a lot of confirmations, thank you for that. And thank you all for joining us in our webinar event today. My name is Ryan Lai. I work at the NinjaTrader Business Development Team in our Denver, Colorado office. And we have a very special event for you today with Alla of Fibonacci Trading Institute. Before we move forward, I wanted to get a good sense of the type of user in today's attendance. So I'm going to put a quick poll into the room, and the question is, are you currently using NinjaTrader? You can fill it out however you'd like and the type of NinjaTrader user that you are. While you fill this out, it does give me an opportunity to read over a quick disclosure. I want to mention to everybody in the room, it is important to understand that there are substantial risks in trading commodity futures contracts, and you should carefully consider whether such trading is going to be suitable for you. This can depend on your specific circumstances and financial resources. It is possible to lose all of the funds that you deposit with your broker, and you can even incur losses beyond these amounts. I'm putting a link into the room for our risk disclosure, and you can look at more information there for the CFTC full risk disclosure. Also, please remember that these training webinars are not a solicitation or a recommendation. They're simply educational in nature. And this presentation is being presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. If you have NinjaTrader brokerage-related questions, they should be directed to brokerage-sales@ninjatrader.com. And you can call the number 312-262-1289. All right, thanks everybody for filling out that poll. It looks like in the lead we have lifetime license key users and maybe tied people that are currently not yet using NinjaTrader. So if you would like to get a copy of NinjaTrader for free, I'm providing a link into the room. Or you can go ahead and take a look at purchase and leasing options at the following if you're ready to trade live. So with that being said, we are excited for this event today, where you're going to join Alla and discover the simplicity of trading pure price action using her proprietary Fibonacci retracement strategies that are completely indicator-free. So discover Alla's remarkably simple approach to identifying key trading levels for isolating trend reversal and trend inception areas with extremely high accuracy. So I wanted to thank everybody again for your attendance, and without any further ado, it is my pleasure to welcome into the NinjaTrader room, Alla Peters. Go ahead and take it away, Alla.
Hello traders, this is Alla Peters, founder of Fibonacci Trading Institute and proprietary Fibonacci method. I wanted to make sure that everybody can see my front slide. Can everybody see the front slide? Welcome to Fibonacci Trading Institute webinar. Fabulous, fantastic. Thank you, traders. So let's start. I encourage you highly to please prepare questions about the instruments of your choice and time frame of your choice, and please post your questions at the end of my presentation. I will try my absolutely best to make it short and sweet, as always. My favorite part of the webinar, answering your questions. So as Ryan mentioned prior, everything I do for educational purposes only. Absolutely essential and crucial to understand risks involved in trading. So, how in the world did I come up with the idea of Fibonacci? Until 2008, I strongly believed in fundamentals. Until 2008, I strongly believed in earnings. I strongly believed in news. In 2008, when market was crashing, I kept believing in fundamentals. Here's the crucial example and very powerful reminder that fundamentals don't mean a thing. Fibonacci does. This is Chesapeake Energy, one of the top energy stocks in 2008. Stock I was holding and listening to CNBC that was proclaiming, this is very strong company, hold the stock. Did that happen to you? 2008 was the year I recognized very, very clearly if fundamentals, earnings, and indicators worked, everyone would have been Bill Gates. It doesn't. That there is something drastically more powerful, something drastically more accurate than news events and indicators will ever be. It is Fibonacci sequence. Market formed by Fibonacci sequence. This is exactly the reason why Chesapeake Energy collapsed, because Fibonacci reversal zone was reached. Every single level in front of you completely proprietary. Every single strategy you will witness next are proprietary Fibonacci levels I developed in 2008 and been teaching to traders from beginner to hedge fund trader in US and globally for the last 10 years. Chesapeake Energy collapsed from 70 all the way to 4, despite stunning fundamentals company had in 2008. Here's another example. If you're reading financial publications, you're probably familiar with Valiant. You probably read that top hedge funds in US had been holding Valiant in 2015, buying close to Fibonacci reversal zone. Since the announcement I made at Hedge Fund Convention, presenting that the only wise thing to do is not hold long position and to do completely opposite because Fibonacci reversal zone is reached, Valiant collapsed 86%. This is the levels you learn how to apply in the course along hedge fund managers. This strategy is applied to any instrument, any time frame, as price action remains exactly the same everywhere. Here's a test I like to do for those who have difficulty separating indicators from Fibonacci. So, take a look on this chart and give me your guess. What instrument is this? Pretty please. What really matters is it doesn't matter what instrument this is. It really doesn't. Price action remains the same on any instrument, any time frame. This is S&P Mini Future. This is the most popular day trading instrument in the United States of America. This is 5-minute chart on S&P. This is a chart we use a lot in the course, along multiple other charts. I have 40-50 charts in front of me. As students know, what chart you choose to trade, absolutely up to you. What instrument you choose to trade, absolutely up to you. Because in fact, if you master this, you can trade anything. Here's confirmation of that. What instrument is this? Please take a guess. No one knows. So why not go to the source? Why not master price action in Fibonacci? It is quite simple. It is not in Q. Anyone else wants to take a guess? Chances of you making right identification is practically none. The only thing every single person knows here, this is price. Common denominator. Why not go to the source and master what indicators developed after? Absolutely not. None of the guesses are correct. This is oil hourly chart. This is all you need. This should be the focus. That's simple. This is a chart that shows you trend inception, trend reversal. This is a chart that shows you volume. You don't need to block your vision with anything else. You master this, you trade S&P, you trade oil. You master this. Why not trade this? Here's another confirmation. Go to the source. What is this? No one knows. You master price. You can trade anything. It's not gold. This is euro daily. This is what I would like to remind every single one of you. If you found strategy that works, it should work on any instrument, any time frame, because price is the same everywhere. If you're ever being told that indicator works on one chart and not the other, number one question to ask, why? The only difference between all of these instruments is liquidity and time you hold the position. Price remains the same. Exact same thing I teach to beginner trader. Exact same thing I teach to forex trader. I teach to ETF, stock, commodity, gold trader. Because price is the same everywhere. And that remains constant. Identical price, identical strategy, identical Fibonacci levels. This proprietary tool you see next on multiple instruments that I look forward answering your questions on can apply to any platform. No software, no indicators of any kind used. Rule-based method that you will see next about key rules. Every single trade you take based on price, every single exit you take based on Fibonacci levels. That pure and that simple. Nothing less, nothing more. So, what is Fibonacci? First of all, never ever 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 mix Fibonacci with indicators. Trading 101. Look on this chart. Indicators on your right. That's not where you find Fibonacci. Fibonacci always placed under drawing tools. Placing Fibonacci randomly on your chart will never work. Knowing the rules, knowing how to use Fibonacci is crucial. And that's what I've done for the last 10 years, using this golden ratio that was discovered by Leonardo Pisano in 13th century. This golden ratio is present in nature. This golden ratio is present in the markets. In one class that I teach every single Friday at 11 a.m. EST, every single student stops using indicators because instantly you see that market is Fibonacci puzzle. The only natural predictive tool in the markets that even Einstein mentioning in his theory of relativity. Fibonacci numbers formed by adding numbers starting from 0. 0 and 1 forms 1. 1 and 2 forms 3. This is the start of the spiral that forms trends. This is a golden ratio that's the key to the markets. Market not a chaos. Market is Fibonacci puzzle. Price action patterns form repetitive Fibonacci waves which can be capitalized upon any market. So what are crucial details that separate Fibonacci from indicators? Fibonacci naturally predictive, indicators are delayed. Here's a couple of examples. Let's walk down memory lane going back years, shall we? Here's Euro. Do you remember Euro at 3900? This is Fibonacci reversal zone. This is where Euro collapsed from. Do you remember crucial Fibonacci support at 3400 on Euro? Are you surprised Euro reached this support and broke through? Identified years in advance. Do you remember what I said about Euro on monthly chart in 2015? This is key Fibonacci support. 1. 2015. Euro respecting this support for the last few years. This support had never been broken. This is exact same thing I said about multiple instruments. No ifs or buts about it. Look on Apple. Do you remember Apple at 91? Do you know that Apple came out with horrific earnings? What did I say? Who cares about earnings? Apple is going to rally. 106, 111 is next. Where is Apple now? once again confirming that Fibonacci is the only natural predictive tool in the market. No matter what you trade, no matter if it's Apple, if it's Euro, if it's any instrument, never ever ever confuse the two. Fibonacci is mathematical natural sequence. My apology, I'm trying to find the chart on Apple. Here's chart on Apple. This is a chart that's been placed in the trading room for years. Spectacular earnings on Apple 2015, Apple collapsing. Just like Chesapeake Energy had done, just like Valiant had done, until this key support. Horrific earnings, and my bias is bullish. Did you buy Apple despite horrific earnings because this is Fibonacci support? As I said very, very clearly, every single instrument that has price has exact same formula. Choice is yours, what you will choose to trade. Apple doubled because of Fibonacci support. For earnings did not mean a thing. Time and time again. You learn price, you can trade on any platform. You learn Fibonacci, you can apply it to any instrument, any time frame you will choose. Indicators, completely opposite, can be applied only to certain platform, certain time frame, if you're lucky enough to find one that works. What is the difference between the two? You unmask and get rid of bad habits. You become more knowledgeable trader every day. And most importantly, all you have to do is decide what you want to trade. Any instrument, any time frame, any platform. Indicators give you everything after the fact. Indicators not predictive. Fibonacci, natural predictive tool, which is absolutely essential and crucial to identify and analyze. This is chart on gold. This is your investment decisions. This chart had been present in the trading room for years. This chart can remain in a play for many years to come. Gold 2016 collapsing from Fibonacci reversal zone. No surprise. Are you surprised what happened on gold in 2017? Should not be. Gold collapsed until this support, buyers stepped in. Bullish rally in progress, but you do not want to acquire position at reversal zone. This is where you're expecting very powerful retracements. This is exactly where Chesapeake Energy, Valiant, and Euro collapsed from. It's all the same. Price is the same everywhere. By the time you come to reversal zone, you are in significant profit. This is not the place to enter. This is exactly the reason I named these levels reversal zone. It's all the same because price is the same everywhere. So, this is a chart of one of the traders that came to me after trying for 20 plus years, because for 20 plus years he's been using indicators. If you're using indicators, you're becoming very wise, very versed in indicators, not in the markets. Blocking your knowledge of the price is not a good idea to do. If one thing you will learn in this webinar is remove the indicators and pay attention to the price, years later, you may develop your own strategy. I'm forever grateful for collapse of 2008. I'm forever grateful that I had all the time on my hands to start studying Fibonacci puzzle. As no matter if it's Euro, no matter if it's NQ, no matter if it's any of these instruments, it's all the same. Identical structure, identical patterns. And that's what I teach in the course daily. And that's all that matters. As Fibonacci is the only highly accurate predictive mathematical sequence for identifying profit targets on any time frame, which is absolutely essential and crucial in day trading, as well as your investment decisions. So here's the example of a couple of crucial charts. Oil. Oil collapse identified years in advance reached key trend inception. This is proprietary trend inception Fibonacci reversal zone. Everybody is seeing this? If you browse my YouTube channel, you will see very, very clearly all of these levels identified years in advance. Remember oil at 26, 27? Remember what I said for years, that this would be a brick wall? Bright pink line is bright pink line for a very good reason. It's never to be ignored. This is the end of the minor trend that taken oil over a year to break through. This is where oil is heading to, traders, as spelled out since 2016. Knowing where to enter your position, you must know the rules. Chart present in the room for years. Here's another reminder. As I spelled out previously, in case you arrived late, zero software, zero indicators. This is indicator and software free method. This is my favorite chart of all times. When I work with hedge funds, when I work with institutions, I use weekly chart traders. This is a chart that's been present in the trading room for years. Take a look. Trend inception 2013. Do you remember S&P at 1600? 2014, 2015, 2016. What did you witness? You witnessed how crucial end of minor trend is. Again, this is your investment decisions. Brick wall. Shock or not. Remember this level on Apple? On oil? It's all the same because price is the same everywhere. How many months did it take for S&P to break through this level? Many. This was flawless point of entry night of the election. We identified with students well before election. It did not matter who will win. The only thing that matters, Fibonacci was showing very, very clearly, bullish rally will skyrocket. What else do we discuss every Friday class? That this is where S&P is heading to. Years in advance. And that's the key. And that's what you learn in the course. These key rules. Pay attention, please. This Fibonacci retracement strategies, this Fibonacci retracement tool can be installed and used by anyone. Beginner trader to hedge fund trader. Currently we have traders in the course who are trading micro forex in Uganda. Hedge fund managers who trading method in Qatar, in London, in Alabama, in New York. Retirees in Florida. This is the rules you learn in the class on day 1. Yes, go to YouTube channel. I will show you all the links. Here we are. This is a key principles, traders. It doesn't matter if you trade NQ. It doesn't matter if you trade Euro. It doesn't matter if you trade 1, 5, 15, daily, weekly, monthly, yearly charts. This is how market moves. This is the key principle I am teaching tomorrow morning, where I start from hourly day trading chart that you can convert to any day trading time frame to yearly. We're going back all the way to 2008 and we analyze everything that played out in the past, and we analyze and review everything that will play out in the future. Absolutely crucial, absolutely the key. Here are the rules, absolutely non-negotiable. Rule number 1, unbreakable. You only trade the end of the first impulse. If you ever break this rule, your success rate drops exponentially. Here's the reminder and here's the example. Take a look. Here's gold. Joseph, hedge fund manager in the course, buying gold here. You can listen to him on the website. Here's his statement. The only website in this business where students actually share and state what they accomplished, what they trade. Take a look and listen. Gold, trend inception. He had taken advantage of trend inception here. Where did he exit the trade? Here. Why? Because this is a key rule you learn in the course. You do not trade counter trend wave 2 ever. If you do, you are willing to stay through huge drawdown. If you don't, and you exit position here, you do not walk through pain. Non-negotiable. Again, wave 2 is a counter trend wave. Do you want to lose money? Do you want to walk through huge drawdowns? Or do you want to walk away in profit and take a break? Choice is yours. If you ever miss the point of entry at trend inception, your only last option left to acquire position at wave 3. It's nowhere near as good as wave 1. Wave 3 is your second option only. This is what played out in the trading room. This is a day trading chart. This is what played out this week. As I constantly remind you, institutional bias remains firmly bullish. Did you witness this morning where price was? Did you acquire position here? This was the exit. Ultimate point of entry played out on January 2nd, not this morning. Buying here, not an option. This is the exit. This is ultimate best point of entry. Exact same thing that happened on Apple. Remember that trend inception on Apple despite horrific earnings? It's all the same. You choose to buy higher, your risks increasing exponentially. Buying here where Apple went through ultimate pain and correction is not a wise thing to do. You're working through ultimate endless drawdowns. Buy at trend inception. Ultimate point of entry. That's the focus and that's the key. If you choose to buy at the end of wave 4 and 5, this is what you get. Your success rate drops to 20%. Did you ever feel like you're buying spectacular trend, but price doesn't do anything? That's exactly why. That's what happened on Chesapeake Energy. That's what happened on Valiant. That's exactly why S&P is doing nothing. No matter if you convert this chart to 3 or 5 or 1. Look at this chart. Nothing. You want pain and torture? Buy at the end of the trend. Why would you do that to yourself? That's your exit point, not your entry. And that's the formula. This is the regular price action. Regular. On any platform you can find this. It only has Fibonacci levels. Nothing else matters. And that's the rules, traders. You saw what happened on Amazon. Do you remember this? What did I say on Amazon in 2016? I said expect Amazon to collapse to 500. Do you remember Amazon having spectacular earnings? Do you? Why did Amazon collapse? For what reason? What did Amazon do at 500? Did any of you take an advantage of Amazon at 500? How did I know? Simple. Fibonacci said so. I said so in 2016 that this collapse will end here. It's not just about day trading. It's about your investment decisions. It was very, very clear. 500 was it. You see this level on this chart? Projected well in advance. Reversal zone is not the place to buy. Not at the end of the trend. Buy low, sell high. Spectacular earnings on Amazon did not mean a thing. Amazon collapsed from 700 to 500. What a flawless point of entry at 500 if you know the rules. And that's constant, no matter what you trade. Here's a couple of my favorite screenshots reminding you that market is that simple. Reminding you that market is that simple. Also reminding you, every single person in the course trades different instrument, different time frame. Are you trading 5 minute? Do you have $2,000 account? Are you trading micro forex? And do you have $50 account? Anything and everything method applies to. Options, stocks, forex, ETFs. It's all the same strategy. Are you beginner trader? Are you managing small account or large account? Choice is yours. Go back also to YouTube video 8 years and watch the videos to confirm the accuracy of the method. How many ticks you want to take is up to you. 100% you make a decision. You identify. Hedge fund managers who trading in the course would never go for 10 ticks. You want to go for 10 ticks? You simply use smaller chart. You simply use smaller time frame. It's all the same. This is NQ. Exact same rules as I just explained to you. Identical. Is it euro hourly? Do you remember spectacular trends that doesn't mean a thing if it's ending in reversal zone? All the same. All identical. Buying the end of the trend is the worst place to be. Every single time. Oil choppy, not a liquid instrument. Respecting Fibonacci levels, identical formula. Google, if you're looking on this chart and you have no idea what this chart means, you have a lot to learn about the markets. Market will never be more simple than this chart. Everything I just shown you about simple formula, trade wave 1, never wave 2, never wave 4, your other entry wave 3. Look how clean this is. Flawless, painless, that pure and that simple. If your vision is not blocked by any indicators. So, master the price, master Fibonacci, decide what you want to trade. That's all that matters. Formula remains the same. I worked with traders since 2011, from complete beginner to hedge fund trader. I live and breathe what I do, and I would highly encourage you, browse YouTube channel, review all the information on the website, and never ever ever hesitate to contact me. All the classes are live. Group classes 8 weeks, private mentoring 16. When I work with you in private mentoring, I log in into your instrument, into your computer, you log in into mine. All classes are live. Course for weeks extended to 8 in case you need to take time off. I'm with students every single day, 4 or 5 days a week. Key classes Friday and Monday. So, ladies and gentlemen, anything and everything on the website under this section, and any questions Never hesitate to contact me, pretty please. Everything under Contact Us page, info@fibinstitute.com, 925-257-4298. So, to answer somebody's question, everything group course you learn on S&P Mini Future. If we have students asking me questions about Dow and NQ, I always answer. Here's another thing that shocks me, how many traders do not know. If you're day trading Dow or you're day trading NQ, you're a day trading volunteer. Do the math. It is shocking how many people don't know the basics of accounting. Here's the proof. Proof is always in the pudding. Look at that. Look how simple. Math. Do the math. Know what you trade. Take a look. You want to trade Dow? Give me a reason why you're day trading Dow. Why, oh why? Being a day trading volunteer. You make one tick for $5, you pay the expenses, you walk away with $0. Is that what you want to do? You want to work hard for free? Good luck on that one. That's exactly identical on NQ. If you're trading Dow and you're trading NQ, amazing instrument to learn on. Not a great instrument to be day trading volunteer if you do the math. Make one tick on NQ, walk away with $0. That's exactly the reason why S&P Mini Future is #1 day trading instrument in US. You make one tick, you never walk away with $0, ever. Do the math. Know what you trade. That pure and that simple. Day trading not your cup of tea. Use everything you learn in the course for your investment decisions. If you can day trade such small charts, more than likely you can invest and do position trading with much more ease. Weekly charts have no noise, have no fluff, have no junk, as small day trading charts do. So, here's a couple of examples, and I look forward to answering your questions. Here's Costco. Everybody is seeing this Costco? This was one of the trades from a hedge fund trader who is in the course. Everybody is seeing how important this level is? Everybody is seeing what I projected on Costco further to the upside? Yes? Is this clear? I will show you multiple other charts. Everybody is seeing this? Where's Costco now? Well, let's look on a few other examples. If you go to YouTube channel and media, boom, are you surprised? Here we are. This is where Costco is now, and this is exactly the reminder. This is not the place to buy. Costco been in pain for the last 5 weeks. Knowledgeable trader buys at trend inception. Knowledgeable trader also knows the importance of this level. Levels projected since when? Shall we walk more memory lane? Again, at your convenience, please review YouTube channel. Time and time again. Here is gold. Do you remember gold at bullish trend inception? Do you remember gold at 1128? This is chart 2016. Did I say that gold is heading to 1200 and 1300? This is the announcements I'm making not just to day trading, but at hedge fund conventions. Did you buy gold at these levels? Trend inception traders, 1000. Very few of you will become successful day traders. Most of you will become phenomenal investors if you learn this formula. In order to succeed in day trading, you must conquer instant gratification, which is not something you deal with much if you invest long term. Where's gold now? Is that possible? My goodness! This is Goldman Sachs. We already looked on gold. Everyone with me? Clear on that? Where gold made it to? I said 1300. Time and time again. I worked with Fibonacci for more than 10 years, more than full time. That's how I know, Brandon. That's how I teach you key rules, which is what you just witnessed in this webinar. Let's do this again. Buy at trend inception. Never enter on wave 2. You missed the point of entry at wave 2. Your other point of entry, wave 3. Did gold make it to 1300? Did it collapse from this level, 1300 to here? Oh, I said so in 2016, my goodness. How did I know? As I said, Ricardo, as I said, traders, let's convert any chart to tick chart. Here's a test. We've already done this test. Let's do this again. Okay, this is S&P 8-minute chart, one of the most incredible charts to trade as a day trader. Why? 8 is Fibonacci number. Never trade non-Fibonacci numbers. Trade only Fibonacci numbers. Here's the basics. My goodness, is it possible tick charts look exactly the same? Can you trade tick charts? Why not? Let's do the guess. Is this tick chart or not? This is what I start with every time to make you think. Is this a tick chart? Pretty please tell me yes or no. Bringing it up. Ricardo, this is your answer. Is it or not? Basics. You don't know. Nobody knows. Every single thing I've shown you, as I said, about 20, 30, 40 times, applies to any chart, any instrument, any time frame. Look at this. Is this tick chart, Ricardo? You don't know. Here's the answer. Jimmy, it's absolutely a tick chart, ladies and gentlemen. 1500 tick chart. Boom. So, you learn in this webinar that you master price, you can trade anything. Every single person here could not make a correct guess what chart I was showing. Every single person here, however, knew that there is one common denominator is present. Every single chart had the exact same formula, exact same price action pattern. Identical. Don't focus on the title. Remove your blinders. This does not matter. Here's another proof. Focus on price action. You master price, you want to trade gold, you want to trade Apple, you want to trade euro. Choice is yours. You want to trade tick chart? Why not? I don't know why you would want to torture yourself to trade tick chart, which is separate conversation. Minute chart, so much more relaxing to trade. Here's more proof to close with, to make you think. What instrument is this? What time frame? One more guess. Can anybody do that for me, please? Thank you, Brian. Any and every. Exactly, time and time again. Price the same everywhere. Can anybody make one right guess, please? Nobody can. Shock or not. What is common? Every single one of these instruments, from euro, from Chesapeake Energy, to gold, to oil, to Apple, to S&P, to tick chart, to weekly chart, to monthly chart, trade the price. This is silver, ladies and gentlemen, that looked the exact same as tick chart. Don't focus on the title. This does not matter. What matters is this. It's identical. Silver daily or this chart. Look at that. Do you know what this is? Trade this. Identical. if I will remove the time frame and the title, silver weekly versus S&P 5-minute versus S&P 1500 tick chart, all the same. Everyone with me? And that's what price does each and every time. Never, ever, ever forget that. Agree? The moment you realize that, your trading goes to entirely new level. If anybody sells you any software or indicator and tells you it works only on this instrument in any time frame, your number one question is why? Why? Price is the same everywhere. If strategy works, it should work on any instrument, any time frame, any platform, because price is the same. The only difference, risk management and trader psychology. The only difference if you have $1,000 account and you're holding position for 5 minutes, or you're trading 7-8-figure account and you're holding position for months and years. Are you trading options? Why not? Choice is yours. Every single time. It's all the same. So ladies and gentlemen, I'm forever grateful for your time. I look forward to answering your questions. If you would please post the time frame and name of the instrument, I will gladly analyze it for you. And if you would like to join us in the course, I'm teaching very important class tomorrow at 11 a.m. So, again, please remember futures have different names on different platforms. Correct? So, question number 1. SQ Daily. I assume SQ Daily is a stock? Doesn't matter to me, remember? 99% of the time, nothing matters unless I don't have data, unless it's a very unique instrument. SQ Daily. Here's a very powerful reminder. Let's go to the source and let's see what happened in the past, and let's analyze what will happen in the future. Are you ready on SQ? Listen carefully. This is SQ daily chart. What's incredibly important? How to set up my pips. It's 8-week course, Rod. My goodness, we answered so many things about trend inception. To learn the strategy and to learn the rules is not something I can teach in webinar. I've taught you key 4 rules. So, SQ collapsed from reversal zone. Do we agree? Everybody is seeing this? What would be pain and torture on SQ? This. This would be brutal. This would be horrific area. This is where SQ will torture you. What are you expecting on SQ right now? For the next few days, SQ will go through very powerful retracements. Knowing what to do with your position is crucial. Bias firmly bullish, retracement in a play for the next few days. Thank you, Ingolf. After this retracement, SQ will be here. This will be ultimate pain. This will be ultimate torture. This is the end of the minor trend. This is broken, price will head higher. Knowing the rules, knowing where to enter your trade, you must know the rules. Next question about, very long question, somebody never. How to draw Fibonacci levels? You must take the course. It's not something I can teach in 1-hour webinar, ladies and gentlemen. I taught you basic rules. This is all I can do in 1-hour webinar. Please review all the information on the website. This is what I'm teaching in 11 a.m. class. Support needs to change the date to January 9th. GE Daily is the next question. GE Daily, oh my goodness, what in the world has happened to GE? Do you know I used to work for the company? So, is this is just painful. What is this? Can somebody please tell me? So let's go to where GE. been for the last few days? And pretty please do tell me if there is something that's incorrect that's showing up on this chart, because this looks quite painful. So take a look, please. What is this? Yes, it's not a problem ever, Brandon. You can discuss and we can figure it out. So everybody is clear, Fibonacci reversal zone present on GE for the last few weeks? Yes? Since November? What is the key problem on GE? This level. 1912 will be pain and torture. What would be crucial next? This level. So, and this is very powerful reminder, never short into Fibonacci reversal zone. So, expect retracement on GE for the last few days. Wave 1 in a play. This will be very, very painful. However, tomorrow I expect retracements. I would be shocked and floored if tomorrow is a bullish day. This is a key, then this. This will be brutal. 2080. Next question, Euro USD. If you want to know about Euro tomorrow, you are a day trader. If you are day trading Forex, you're trading the most expensive instrument on the planet. So I hope you enjoyed learning about Dow, learning about NASDAQ, and hear what's happening on Euro tomorrow. This is Euro tomorrow. So bullish rally overextended, bullish rally in a progress on Euro. If you convert this chart to hourly, it will give you more inside look. Do you see what's happening here? So this is your key Fibonacci resistance. Do not buy near. If Euro retraces here, it's a gift. And remember where this bullish rally came from, correct? Came from 1. So currently Euro in correction, currently Euro in pain. Currently knowledgeable traders staying out. Price retraces here, your bias is bearish. Price retraces here, you look to buy, only if rules are met. So, any other questions? No other questions, traders? My joy and pleasure. Yes, but again and again and again, you cannot put Fibonacci levels on your charts randomly. It will never work, ever. What I teach you in the course is shortcut to 10 years of work. So, you had enough of indicators. You know incredibly well that indicators do not work. You're willing to actually master what indicators developed after you came to the right place. Here's one of my other examples. So, here's oil daily chart present in the room for years. Here's a very powerful reminders. Remember last year OPEC production cuts, Russia, Saudis, everybody at the table. What has happened to oil? Are you surprised? 1200 point collapse. Are you surprised? 1200 point collapse. Bullish news did not mean a thing. Do we agree? Here's another reminder and why I love bringing oil news, which I've done today on oil. Let's go back memory lane and look on this chart that's been present in the room for months. And what happens if you trade on the news versus Fibonacci? So, bullish news on oil November 8th. Ouch! Fibonacci reversal zone is present. Do not enter into. It doesn't matter how spectacular and bullish news is. Oil collapses. Ouch! You want to buy on the news? Wouldn't the world be full of Bill Gates if it worked? Where did the price collapse to? What is the most important rule you learn in the course? Buy at trend inception. Look at that. However, the news is bearish. My goodness. Is it possible to buy against the news? Absolutely. Fibonaccian rules are met. Take long. Fibonacci will always be drastically more accurate than news will ever be. Look what happens next. Is this continue repeating? Bearish news and oil rallying again. This is why I bring oil news, bullish news, and oil collapses again. Clear on that? Browse YouTube channel. It's all there, traders. It's all on the website. Videos going back 8 years. You can review at your convenience. Any other questions, traders? Please do ask. And again, do not hesitate to contact me after hours. Phone number posted on the website. I always look forward to speaking with you. Clear on that? Yes, because oil contract had changed. Hello? This is a chart on oil from today. And this is why you need to learn the method. This is what we discussed. We had spectacular bullish news on oil, and levels projected well below before the news is a problem. This is a level. The levels you saw before from months ago. And that's a difference. And that's why you need to learn. Speculation will never work. This is what we discussed in the room on oil this morning. And as you could see, this was a brick wall. This is the reason it is so bright pink. I share with students the background I have before I came to become Fibonacci strategist and educator. My background, Johns Hopkins RN. I managed psychiatric unit at Johns Hopkins for 5 years. I witnessed the importance of colors on human brain. This is exactly the reason why this hot, bright pink line is so bright pink. It's never to be ignored. You learn the rules and you decide what you want to trademark, as I spelled out. Students holding positions well overnight, for days, weeks, and months. If you're holding futures position overnight, you better understand what that means, as hopefully you are educated enough about margins. And you know what that means. Because if you don't, you certainly should not hold position overnight. So here's an email I received from one of the graduates. Jeff, 77, retiree, works 5 minutes a week, full-time skier. This is what he's done. Do you want to work 5 minutes a week? Library of emails from graduates. Do you want to trade 5-minute chart? Do you want to trade 1-minute chart? Do you want to trade option and stocks like Jeff, who fired his financial advisor? Choice is yours. That's the reason I live and breathe what I do, because of students and their stories. You can see pictures on the website. You can meet students time and time again, and you can certainly listen to them and Jeff. So, my students, my best friends for life. I travel the world meeting students. Recently I went to Asia, I went to New York, and this is what students share on the website. So, review all the information on the website about the course, about us, view the YouTube channel, listen to the students, and again, feel free to contact me anytime. If I don't pick up the phone or I don't answer the email, I will do so as soon as I can. info@fibinstitute.com, 925-257-4298. Thank you, traders. Thank you, Ryan. I love NinjaTrader. 2 pieces. By far the best trading platform. No ifs or buts about it. This is all I have for today. If you don't have any other questions, ladies and gentlemen, no other questions?
Yeah, Alla, I'm here.
Ryan, can you hear me? Okay. So when rules are changed, Mike, you need to learn the strategy and reapply the levels. This is exactly what you learn in the course. When does the trend end? When rules are met. When Fibonacci levels are reached, which is exactly what you're witnessing on Euro. Knowing what to do with your position is the key. Here's a very powerful example to address your question. Look on Apple. Apple collapsed in 2015. Very powerful reminder. Spectacular earnings. Look what happened on Apple. It didn't collapse. Look how important knowledge is. Look how brutal this correction was. There is a very good reason why Apple did not collapse. How often does this happen? Less than 20%. How often does this happen? More than 80%. And that's why knowledge is power. So, if resolution for New Year, not to be a follower, but to be a leader, you came to the right place. Master price, master what indicators developed after. Master Fibonacci, which is drastically more accurate than any news, any fundamentals, any earnings, any indicators will ever be. Thank you, traders.
All right, this is Ryan from NinjaTrader.com, and I'd like to give a special thank you to all the Peters today of Fibonacci Trading Institute for a great presentation. The NinjaTrader ecosystem is pleased to sponsor our weekly vendor events as a value-added service for all of our clients. So if you find value in these events, we would hope that you would attend them on a regular basis. And we'd like to remind everybody in the room that the information provided in this presentation is that of Fibonacci Trading Institute and not that of the NinjaTrader Group. All information presented was for educational purposes and should not be construed as trading advice. If you are curious about joining NinjaTrader training events throughout the week, I'm posting a link into the room, and you can join these at your own convenience. And we appreciate the time that you spend with us in these webinars. We hope you enjoy the rest of your day and hope to see you in future webinars. And happy trading from all of us here at NinjaTrader.